Hello and welcome to the stock specific class here for Thursday, December the 17th. Just a quick reminder for next week. You might have noticed I mentioned this in the last class that I switched the schedule so that we'll be having the market update on Monday, same time as this normally starts, and then the stock specific class on Wednesday. And that order will repeat again the following week. That's so we're not doing a class on Christmas Eve or New Year's Eve. I noticed that about a week ago or so, and figured that I know I didn't want to be doing a class on those days. So and I didn't figure too many people would want to be sent to a class on those days. So it'll just be for the next 2 weeks, and that we'll do Monday, Wednesday for each of the classes here. And the topic for today, after I do the stock specific portion, will be ABC patterns. We'll talk about how to recognize ABC patterns. What are they? How do they tie into some of the things we've been going over during the last few weeks? Trends, Fibonacci retracements, which we covered in the last class. How does this kind of all tie in together? We'll go over that today in the second part of the hour. All right, to begin with, let's take a look at the market conditions. I mentioned on Tuesday that we're kind of in a critical area, that where the market could either break out again or go into a little bit of a deeper pullback. There's a little bit of still concern whether a stimulus package would get done, what the Fed was going to do. We had a Fed meeting this week. And so far, it looks like the market is confident that things will end up working out. Obviously, it was pretty confident from what the Fed talked about yesterday, and it's continued to move higher. The market's continued to move higher today. We'll see if that continues. It still is starting to kind of look like it's getting to be a little bit of a tired market. We're not seeing some of the bigger moves higher. We every time we get a bigger move higher, we tend to get a drop or a pullback. So we're kind of just moving sideways. We'll take a look at the charts. You'll see what I'm talking about here in just a second. But as far as the direction alerts are concerned, we're still in a bull market. One thing that in the momentum indicator, we're still kind of in that buy range. We've moved up a little bit with the rally over the last couple of days. The breadth indicator is getting into the early part of that extreme range. Still doesn't mean that the market can't continue, but we're starting to get a lot of stocks that are, kind of getting a little bit overbought or a little bit stretched. And so whenever that happens, you have to worry a little bit that you can see a little bit of a bigger pullback. But like I said, we're not in, there's still room to be able to rally. Usually you worry when 2 out of these 3 indicators start getting into that extreme range. Sentiment is still kind of in that complacency area. So we're still looking okay there. The buy-sell ratios we're still a little bit wide, but we've been wide now for a little while. So it could that continue? Yeah, it can continue for a little while. So it's possible it kind of fluctuates back and forth like this if the market is kind of continuing to just kind of grind higher. But we do need to recognize that there are a lot of stocks that have the buy signals right now, and that could be getting close to kind of that extreme range. If we definitely if we start to see those other indicators get into those extreme ranges and we're still pretty wide on the buy sell ratios, it's definitely a warning sign that we're probably going to get a decent pullback pretty soon. Sentiment, again, we're not extreme yet, but we're starting to move back up to that extreme range. We'll keep an eye on that over the next few updates, see if we start approaching that extreme range there. All right, let's take a look at chart of the S&P 500, SPY, and you can kind of see it's more distinct on the Dow. But if you look at S&P right here, you can see that here we kind of just moved back and forth, moved a little bit sideways there. The last few days we've been up, but really look at the we really haven't gone anywhere after the open. We pretty much opened and closed near the same area there. And so that concerns me a little bit, that we're not getting any push throughout the day. It's pretty much where it opened is that's the whole move. The whole upward move was overnight basically, and so we'll see if that starts to change. And it could be that it's still related to trying to make sure a stimulus package is done, and so it could be a little bit from that uncertainty still. All right. The VIX though has been moving lower, so again we're not seeing any warning. What I would be looking for or worried about is on the days like we've had the last couple of days where we haven't really moved much from the open, but we're up. If we start seeing the market up and we start seeing the VIX start to move up, what that tells me is that it tells me that professionals are still buying, but they're also buying insurance. They're buying those protective puts to protect themselves against a pullback, which means that they don't trust the trend as much. And usually that's an early warning sign that we could be due for a little bit of a sell-off or pullback. Not always, but you start combining that with other clues, and it can start to forecast a correction. I mentioned the Dow chart. Let's take a look at the Dow chart here. It's more distinctly sideways, as you can see. All right. So let's look at some individual stocks that we might be able to use to take advantage of the fact the market still looks like it wants to go higher. Let's go into our sectors here. Start in computer and technology. We'll go into the hold section. Again, for those that are new, what I'm looking for, I like to go into the hold section because what I'm looking for are stocks with a 98 strength rank, right over in here. And I would add that I also like to see a nice chart pattern out of it. And then that's part of what I'm doing in these classes is teaching you how to recognize, how do I choose between all these stocks that are in a decent range here that we could probably buy. Well, or why would I choose a 96 strength rank over a 98 strength rank? Well, the 96 strength rank might have a stronger pattern or a stronger bullish pattern that it's forming. And again, the more of these different things you can kind of combine in your analysis, and it takes a little time before you kind of get some of the stuff down and can do it yourself. But the better you the better you compare these different probabilities together, the stronger the chance that stock is going to move in the direction you're expecting it to move in. So as you'll notice, I don't always choose 98 strength rank. If I don't like what I'm seeing in the 98 strength rank, I'll move down or up. I'll take a look at, usually I start by taking a look at all of these at the top, 99 to 97. And then I'll start moving lower if I feel like I need to drop down a little bit further to find a pattern there. Another thing to keep in mind when if I go back to the sector chart here is that this is ranking the strength of the sectors. So computer technology has been the strongest sector for a while now, but these will shift a little bit. One thing I want to point out is that the medical sector is starting to move up the list a little bit. So we're starting to see some strength in some of those medical stocks. We'll take a look at one that I like today. But going back to the hold section right here, the only 98 strength rank is Zoom Video. Many of you are familiar with Zoom. Probably never heard of it this time last year, but I think just about everyone is aware of it or is using it in some fashion nowadays. And the tremendous growth it's had this year reflects that. Ticker symbol is ZM. Let's take a look at the chart. Now, what I'm looking for on this one is, let me switch this over to signals too. On this one right here, this one's had a much deeper pullback, and it's recently, as recent as this Monday had a sell signal. One of the reasons why this one doesn't have necessarily the traditional chart pattern that I like, but it's kind of a combination of things. It's the fact that I still think the stock is going to be valuable going forward. Much like other companies have become part of our everyday usage, Facebook and Instagram and Twitter and some of those, that this is something that, is going to be, I think they're the leaders in this kind of work from home type space. It is a competitive space, but just like with streaming, Netflix, there's all these other streaming platforms coming up, but still the first place usually I go, at least, is Netflix. If I don't see anything I want to watch there, I start moving over into other platforms. But they're kind of they were the leaders. They were the ones that started it. There'll be other competitors in this, and there already are in this field, but they're kind of the leaders there. So if you believe in the fundamental story of Zoom, I think this is a pretty decent pullback to keep an eye on. Obviously, it's not ready yet. It hasn't gone back to a buy signal. But what I wanted to emphasize was what looks like we're possibly putting in a double bottom right here. So we finally hit a low. We rallied off of that. Then we came all the way back down, but it looks like we're stopping here. We're starting to move up. Now, we haven't moved up dramatically from here, so it's always possible it could still break this. And if it does break this, you'd probably want to leave it alone for a little while. It might have a little bit further to drop. But this is kind of the early stages of possibly starting another rally again. And you can see back here, it consolidated for a little while, went to a sell signal for a month and a half. It kind of formed this whole process here, then it took off, exploded out of that. What I would be keeping an eye on is this high up here, because if you can break out above that, your chances of getting back up to here are very high, and even beyond that start to increase a lot too. So that I'm not saying we have to wait till it breaks out above there, but I would imagine that we're really early in the hold stage. We just have gone from sell to hold, and so this is probably going to take a while before you get that buy signal, and you're probably going to be pretty close to that this previous high right here when you get that buy signal. So the decision I might make at that point is, do I wait for it to actually break that higher high, or do I get in on just the buy signal? You can make that choice on your own when that happens, if you're continuing to watch the stock. So this is going to be in our watch list for a little while. But again, I think the key is to keep an eye on this support area here. If it holds, if in a few days, if this thing breaks it, then probably that's going to be off my watch list, and I'll move on. I'll come back to it if it starts to rebound again, and I can see it rebound. But this is one that I kind of liked on a deeper pullback here. Let's go into construction, the construction sector, under the holds. And I'm going to look at, there is a 98 strength rank, so I'm going to look at the one at the top here, this OESX. It's a 93 strength rank. But I'd like to, it looks like it's been kind of moving a little bit sideways here. It could be moving a little bit sideways here. Now, whenever you have a pattern like this where you've pulled back, here's your trend right here. You've pulled back, and then you've started to move back up, but you haven't broken out higher again. You're kind of in the middle here. This is kind of a no man's land right here. But this pullback area is going to be critical. If we break out above here, that's very bullish for the stock. If we break below here, that's going to be very bearish for the stock. Now, we did this. I can't remember if I used the SPY or the QQQ. Let me look at the QQQ here chart. Yeah, it was a QQQ. We did this in the previous update. I think it might have been I can't remember. It might have been Tuesday. If it wasn't this last Tuesday, it was the Thursday before. But I said keep an eye. So here we have our trend. Here we have a pullback, and we're starting to move back up. Yeah, this had to have been on Tuesday. But I said keep an eye on that high and this low then, because if we break out above here, that's going to be bullish. If we break down below here, that means we probably have a lot more selling, and we could drop a lot further. And you can see that same thing happen back here. Here you had the trend was up, you had a pullback right here, and then it started to move back up again. Those are going to be your key areas to watch. If it breaks out above there, that's going to be bullish. Breaks below there, that's going to be bearish. And obviously it broke higher there. Try to see if I can find one that I was going to see if I could find one where it broke the other way, went down, but I don't see one just yet. But I'll definitely, that's something I'll point out a lot of times in the update. So anyway, let's go back to construction then and look at OESX. Now this is very close to going back to a buy signal. And it started to move back up again today after selling off a little bit yesterday. But there again, you could, if it does go back to a buy signal before breaking out above that high, you could wait another day or so to see if it could break above that high, just to give you a little bit more confirmation. But it just depends on how much confirmation you're looking for, you know. But that's something you could consider there. But I like the overall pattern just because the overall trend is still up, and it's in kind of this kind of sideways or consolidating stage. And it looks like it should move higher. All right, let's look at the industrial products sector. And we'll look at this IPWR. It's a 96 strength rank, but I looked at the other ones, and I didn't like the other patterns as well. There was a 98 strength rank with FTech here, but it looked like it could still pull back a little bit in the near term. So I like this IPWR. And what I liked about it is, maybe some of you that have been following me for a while, it starts to jump out at you, but there's kind of a bowl-shaped move right here. You know, these things, when they break out above these bowls, they really take off. But you can recognize ahead of time, a lot of times when they're about to, if this can hold a higher low. So obviously we had a pullback after it tested that previous high right there and kind of created that bowl. It's kind of moved up off of this low after this pullback right here. And if that can hold, well, it looks like it's already created a higher low. And if this thing can go back to a buy signal, there's probably a pretty good chance at the very least it's going to get back up to this previous high. It could still bounce sideways for a while and something like that, but it should at least get back to that previous high. And if it breaks out above there, the rule of thumb is you can take the distance from the breakout area, the top of the bowl, to the bottom of the bowl, and project that distance upward. I'm going to run out of chart here to do that, but that tells you there's potential there. At the bottom of the bowl is about $5. Top of the bowl is about $11. So you're looking at about a $6 move. If it breaks out, it could go another $6. So you're looking at, you know, $17 or so that could run to. It doesn't go there immediately. It doesn't always go there, but that's kind of the rule of thumb. It happens enough times to where that's why we call it a rule of thumb. We don't call things rules of thumb if they don't happen very often. But it also means that it's not exact. It doesn't mean it has to or guaranteed to do that or anything like that. But so I like the potential there for this. It's not too far away from going back to that buy signal, so that's one to keep an eye on there. But there's definitely some potential there for that stock and that chart. All right, lastly, let's do one under the medical sector. I told you I had one in there that I'd like to look at under the hold section here. And it's one that you've heard a lot of lately. It's currently at a 99 strength rank, but I like the pullback it's recently looks like it's coming out of, which is Moderna, mRNA. They're obviously the ones that or one of the companies that have the vaccine, that they're just waiting for the approval for it to get it out there. But it's been on a tear, and it's pulled back from these highs. So we've had this big run up right here, and you've had this nice little pullback. And this is kind of a pattern that we're going to be talking about today, kind of an ABC pattern. You had a move down right here, wave A, wave B, wave C. Looks like it could be completing that correction, and could be starting another move higher. It has moved quite a bit, and so this could be a little bit more of just a momentum trade where it's already in a strong trend, and you're just kind of trading that momentum. You'd want to wait for confirmation. It's not too far away from going back to a buy signal there. And sometimes these patterns look like they're ready to go right back up again, and then they fade a little bit and they keep dropping. We saw that with what was the stock we were looking at? CBAT. It's kind of just kept dropping and dropping until, and that was kind of dropped below its retracement zone too. So that's possible that thing could keep dropping, and that's kind of why we wait for that confirmation, wait for it to start to move back up, go back to that buy signal. All right. So that kind of concludes the stock specific portion. Let's get into the lesson for today, which is talking about ABC patterns. Now, ABC patterns, the term ABC patterns have come from what we call Elliott wave analysis. I'm not going to get into everything about Elliott wave analysis, but it basically suggests that stocks, when they pull back, will tend to pull back in kind of a three-stage move, meaning you have here's your uptrend right here. Usually when they correct, they'll have an initial sell-off, so you have initial move down, initial counter trend move. Then they'll bounce a little bit off of that move where they attempt to rally. And then you have the final portion of the corrective move. We have one more move down, and then the trend will resume. And so that first move down is labeled wave A. Second move, the attempted rally, is labeled wave B. And then the third, or the second move down, but the third part of the wave, we call these waves here, would be wave C. And then once that wave C is completed, the expectation is that the trend will continue. Now, when I first learned to trade and when I first learned about ABC patterns, I started to get so focused on that three-wave move. I'm looking for that three-wave correction that it just was hard to find a lot of trades. I went through a lot of charts, and actually it was good because I looked at a lot of charts. I got a lot of experience looking at patterns. But what I was looking for is exactness. I was looking for that exact ABC move, and you could say, well, boy, we found one right here on there. There's wave A, wave B, wave C. We're expecting the trend to continue. But what you're going to find, if you're into trading and you're looking for exactness in things and you're looking for perfection, people that have the very difficult time with trading sometimes are engineers or scientists, where you're used to laws and rules that always work. The law of gravity always works. You don't say, well, there's an 85% probability that if I jump off this building, I'm going to hit the ground down below. No, there's 100% probability that if you jump off that building, you're going to hit the ground below. So they're used to that exactness. And when we get to trading, they start looking for that same thing. They want people to teach them a mathematical formula that will create that exactness, that will always always know when that stock's going to go up or when it's going to go down. And obviously by now, that just doesn't exist. And hopefully you know by now, so you don't go chasing it for the rest of your trading career and wasting a lot of time and money. There is no exactness. And that's why you have to start to focus on on probabilities. And along with that, I noticed that with chart patterns, there's hardly ever exact chart patterns. And so when I started teaching ABC patterns to help people avoid the long amount of time that it took me to kind of realize that I had to stop looking for that exactness, I started to teach the variations. And one thing I taught in that first trend class a couple weeks ago was I said that stocks will tend to alternate between impulsive and corrective moves. They'll have an impulsive move up where they go up, 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 and then they'll go into a corrective phase where it's going to be more choppy or sideways. And once that sideways move is done, the previous trend should continue. And that's where I told you the phrase, whenever you see a stock moving sideways, you want to pay attention to the direction or trend it was in before it moved sideways. That's where it's more likely to go after it's done moving sideways. And I think that is probably a more important concept to get down than just purely the ABC pattern, because you're going to see a lot more of this where you see that more sideways consolidation. And then you see the trend continue. But you compare the two. The reason why it looks a little, when you're in a trend, the reason why it looks a little bit more choppy and sideways is because it's very often it's creating that ABC pattern. Now, by the way, ABC patterns can look, they don't always have to look like this. They can look real sideways. Sometimes you'll get an impulsive move up. You'll get wave A, wave B, wave C, and then it'll take off again. Wave B, by the way, is often referred to as a sucker's rally because you'll get that initial sell-off. You have the nice strong trend. People are waiting to buy a pullback. They don't want to buy up here. They're waiting for the pullback. So you get this pullback right here, and it starts to move back up, and they jump right back in again. This happens. You'll notice this happens on a lot of stocks that have really gone parabolic. They go straight up, and then they have that. You're like, I can't buy it right here. And then the first pullback it has, as soon as it starts to move back up, you don't want to miss it again. You don't want to miss that big move again. So you jump in right there. And then you're always disappointed or frustrated when a few days later it rolls over and has another bigger move down. Well, that's creating that ABC pattern, and you got in on the suckers rally. Now, there are some cases where a stock just pulls back in one move and then continues higher, and that's why we're always tempted to jump in on that first pullback, or as soon as it starts to move higher off that first pullback, is because we've seen examples of stocks that have just taken off again. But over time, you start to realize that, okay, I might buy that first pullback, but I also better realize that could be a sucker's rally, and so you better have a plan to stop out or recognize if that thing rolls over again, that it's probably got another move down, and you might need to stop out of that trade and re-enter it later on. Now, one exercise that I've often taught that can be helpful, and it's kind of a kindergarten exercise, but it really does help to train your mind to see this. I get it that some of you that are brand new to looking at charts, I start drawing some of the stuff, and it all looks confusing and things like that. To help you kind of understand the flow of trends, I used to have students just take out a pen and paper and just draw a trend with this concept of impulsive and corrective moves. Meaning, first of all, I'd have them just start off with the stair step, draw a move up and then a step, a move up and then a step, a move up and then a step, a move up, and then have a trend reversal. We have impulsive move up, impulsive move down, and then a step, impulsive move down, and then a step. So now you're going down a set of stairs. And just draw that over and over and over again, and then reverse it again. Have an impulsive move down, impulsive move up, step, up, step, up, step, and you're just drawing up trends and down trends that way. And then when you get that basic concept down, you can then add in kind of just the choppy sideways things we talked about in that previous class, where you have an impulsive move up, and then your step is more choppy like this, and then the pulse will move up, and then choppy like that. Pulse will move up, and then we're going to reverse trend with impulse will move down, and then move sideways, and then impulse will move down, and then move sideways. Impulse will move down, and then reverse back up. Impulse will move back up, and just add that little twist into your exercise there. And again, I'm talking, some of you might have to draw this like hundreds of times before it really just starts to click, and you start to see that flow on the individual charts. With learning about ABC patterns, you can then add that into that step where you have an impulsive move up, and then you get that ABC, wave A, wave B, wave C. And then you continue the trend. And then you get that wave A, wave B, wave C. And then you continue the trend, and then now you're going to reverse trend. We have impulsive up, impulsive down, and a bearish ABC pattern is it's the same concept. It's just moving in the opposite direction. You're in a downward trend. Your initial move up, there's initial rebound up, and then it pulls back again. So that was wave A. It pulls back right here for wave B. Has one more attempt to rally right here that fails. That's wave C. And then you continue the downtrend. Now, usually it's these bearish ABC patterns that are tough for people to kind of get down because they don't trade bearish very often. But that's why it's helpful to kind of draw this out. Now, again, this is a kindergarten exercise. I get it. But I've been teaching all this trading stuff for a long time. I've had a lot of students over the years come back to me and said, at first I thought, this is the silliest thing you're asking me to do. I'm going to have to go in my office and lock the door so nobody sees me doing this. But they've given me feedback later on that, hey, that actually helped quite a bit in speeding up the process of getting this whole concept down and and being able to see it on the charts as well. And so that's all I care about is does it help you learn this stuff faster and better. Now, I said that we could. So one other concept here, and again, don't get caught up in the exactness of this, but it is kind of spooky sometimes when you see this pattern out there that this relationship works pretty well. There's a relationship between wave A and wave C. So let's draw out our trend here. So wave A, wave B, wave C. Let's do it again. Wave A, wave B, wave C. There's what we call the wave A, wave C relationship. And that is that very often this wave C right here will end up being about the same length as wave A. Now the key word here is about, and it's going to always be the key word with anything I cover, about. I don't use exactness or exact words, words that convey exactness. But it's usually about the same length, meaning wave C can sometimes be a little bit shorter than wave A or a little bit longer than wave A. But what I tell people is usually it looks about the same length as wave A. It's to where usually you can recognize it immediately that looks about pretty close to the same length as wave A. Now, why is that valuable to know? Well, if I understand that stocks, when they start to pull back, tend to pull back in this fashion, then first of all, a lot of times I'm going to avoid buying into that first pullback. That'll save you a lot of money most of the time, is avoiding buying in on that first pullback, because you'll avoid the suckers rally. Okay, you might miss a few that just pull back and take off, but the majority of the time it's not done correctly. Once that suckers rally is done and you're starting the next move lower, you're starting your wave C. Well, I could take a look at how far wave A dropped. So let's say wave A dropped $5 right here. And then we rallied up on wave B. Wave B rallied, let's say, $3. And we're starting to move back down again. Well, I could just take, let's say wave B ended at $50. And I know that wave C dropped $5 off of its high right here. I could say, well, this stock should drop down to about $45. because that would be a $5 drop here for wave C. And that would be about where wave C would be the same distance as wave A. Now, I understand that maybe it only drops to $46 because it could be a little bit shorter than wave A. Or maybe it drops a little bit further to $44 or something where it's a little bit longer than wave A. But I got a range here now that I can look at as to where I expect that correction to end and where I expect the next trend to take off. And so and again, it doesn't mean I'm going to try to buy in right at those areas there, but that might be where I start to expect it to start to move back up. I might want a little bit of confirmation. So when I see it start to move back up, maybe it starts to come off these lows right here and rally back up, and I decide to get in, somewhere right there, expecting I'm now catching the next move higher. Now, if we look back on Moderna here, again, here's wave A. Again, potential. This is possibly wave A, wave B. That's another thing, is that all I have right here is a possible ABC pattern. Exact ABC patterns are only recognized in hindsight. Okay, I can look back somewhere back in the trend and say, oh, there was an ABC pattern back there. Obviously, that's not going to help me going forward. But again, nothing's going to help me. Nothing can tell me that Moderna is going to go back up right here. All I'm looking at right here is the fact that it looks like it has a wave A, wave B, wave C. Wave C looks about the same length as wave A. And if it starts to move back up and give me a buy signal, there's a good chance that trend could be continuing. Now, there's one other relationship we can look at. And again, this is spending a lot of time on a particular analysis, on analyzing. You may not want to spend that much time, and that's why there's shortcuts where you can just look at, you're not looking for that exactness, you're just looking at the, is it in kind of a range where you would expect that trend to start to continue again. But actually Tuesday we talked about candlesticks. So it was last Thursday we covered retracements. Now, what was the main concept of the retracement? And you can go back and review that class if you haven't been through it. It was last Thursday. Well, the main concept of the retracement is that stocks will tend to retrace about 50% of their moves. So if I put my retracement tool on the screen, right, and I measure that low to this high, and I'm trying to see how far the stock has pulled back off of that range, that trend, right here would be about 50%. And we had a range. We had 50%, 38.2%, and we had 61.8%. That gave us our retracement zone. Well, you could combine your analysis here and say, okay, not only does wave C right here look like it's the same length as wave A, but it's also retraced 50% of that previous trend. It's in the retracement zone. So it's in an area right here where this is where I would expect that next trend to start moving. Okay. Now, if we look at Moderna here, we already have the. I'm going to switch the signals off. Sometimes it's a little bit easier to see. So, what was where was the start of this? The trend up right here? What was right here? It started right here, and now it's retraced in that kind of ABC pattern right there. Let's throw the retracement tool on there and see. Oops, that's the volume. Hold on. And let's see how far it's retraced that trend. Well, it's right at the 382 retracement. So it's retraced 38.2% of that trend, but it's in the retracement zone. Now, could it still drop down a little bit further into the retracement zone? Yeah. It also looks like wave A and wave C are about the same length. So this is in an area here where if it's going to start moving back up, this is where it should start moving back up. Now, what we learned, but we also know that it could pull back a little bit further. It still could pull back a little bit further into the zone and still end up working. Now, where do we know that it's probably pulled back too far and it might be in a trend reversal? Well, that's where you could use that 618 retracement. If it dips below that 618 retracement level, it's probably not going back up. The probabilities are significantly shifting to, or dropping, that it's going to go back up. So what do I mean by that? Well, and this could end up happening with Moderna, because all we have here is a potential or possible ABC pattern right here. But there's a lot of downtrends that start off as looking like ABC patterns, meaning you reach a peak right here, you get what looks like wave A, wave B, wave C, and you think, oh, this thing's going to go up, and then it just keeps dropping, dropping, and dropping. Well, how do I avoid that? How do I keep myself from making that mistake? Well, again, if your wave C looks about the same length as wave A, and here's your retracement zone, we'll say this is that 618 retracement right down here at the bottom of it. And in this stock, maybe it even started to move back up, and it came right back down again, and now we're dropping below that zone. Well, there's two things that would tell me that this thing could be in a trend reversal. Number one, we're below the 618 retracement level. But the other thing is that now wave C doesn't look the same length as wave A. It looks twice as long as wave A. That's a warning sign. Usually that's not going to happen. And so that could tell me that, hey, maybe this is in a trend reversal. Either I avoid getting in, or if I am in, I stop out. You can put a stop below that 618 retracement level. That's a good stop loss level a lot of times for trends. Okay. All right. Now, if we go to, you can take a simple list, or you can even just go through like Dow stocks or something like that, and see if you can see this pattern in those. Let's look at Boeing right here. So Boeing had this little burst up right here. There's kind of the trending move. Now it's kind of been moving back, but notice how it moved back right here. Had a move down right here. A little bit of an attempted rally right there. And by the way, sometimes what will happen is in the ABC pattern is you'll get wave A, and then wave B will kind of move a little bit sideways like this, and then you'll get wave C. And that's kind of what happened here. We paused a little bit sideways here and then came down. So it looks like it's possible that we got a little bit of a ABC pattern. And even if you don't see a real clear ABC pattern here, this is definitely more choppy to here, which would be a little bit more corrective. Now, if I could check to see if this is in the retracement zone. Now, if I want to see just taking this last little burst up, because here's a little bit of a correction right here. Here's a little bit of a step right here. So I'm going to take a retracement of this move up right here. Need to push this out a little bit further here. There we go. All right, so Boeing is right at the 618 retracement level. So if it's going to turn around and start going back up, this is where it needs to. There's not much more room for error here. This thing needs to start turning around and going back up. And if it dips below that level, it probably has a little bit further to drop. Now, what you also have in this area here is you've got, hold on, let me take the retracement tool off here if I can. You've got this previous high right here. It's lining up in the same area. So you got resistance here, you've got resistance here, and this is the last ditch support for this thing. If it drops below there, it's probably coming all the way back down to here, and who knows, it could be in a trend reversal at that point. Now, I'm not saying I would go run out and buy Boeing right here just because I'd want to start moving back up, showing it starting to move back up, and then you could buy into it, expecting that it could start moving higher there. I think Chevron was another one that had a possible ABC pattern. Yeah, here we go. Now this one might still drop a little bit further here. It might still be in that C leg. Now that's a larger correction right there, so I'd be going off of where it started this larger trend. Here's the larger move up right there. That looks like that's what this is correcting, is that larger move up. Throw my retracement tool on there. And I'll be the first one to admit, and so we still have a little ways to get to that 3.8 to the minimum retracement level. So when I said this could drop a little bit still, it probably still could drop a little bit further to get down into that $84 range there, where it might find some support. Now I'll be the first one to tell you though that I don't measure every pattern I'm looking at. It would take way too long. I will say that sometimes I'll do it if I narrow a list down to a handful of stocks and I'm trying to pick out of a list of 5 to 10 stocks which ones I want to use. I might do a little bit more analysis on that. But the reason why I don't have to measure everything is because over time you'll be able to eyeball it. You can just to me drawing this. You don't have to be experts at this, but you can already just kind of tell this wave C looks about the same length as wave A, and this whole correction looks like about a 50% retracement of this move up. It doesn't take a rocket scientist to be able to just know that you're close. And so what you want to do I would say is a main exercise here. Don't worry about using the Fibonacci tool so much, but focus on getting the concepts down, getting so that you can just visually see without having to measure, and that'll be enough. That'll be enough to help you right there. It's just understanding the concepts that I taught today. And then I taught in the retracements classes. Classes kind of tie in quite a bit together. So now to further help you, especially with larger corrections, now this tool is going to be geared not towards, because I'll tell you right now, ABC patterns form in all different time frames. You could have a 6-month move up and then go into a 4-month ABC correction that leads to another 6-month move up. But within this 6-month move up, you could have smaller stair steps, move up right here, ABC, and move up right here, ABC, and move up right here. In other words, ABC patterns are what we call fractals. These smaller stair steps are building these larger stair steps, which are building even larger stair steps. And a lot of times when you're in a downtrend in the market, you're actually in one of these larger corrections, meaning that, here we might have moved up for 3 years right here, and then suddenly we have this sell-off for several months, and what it is you're stair-stepping down right here. But that stair step down was creating a larger wave A of a larger correction. Then you have a rally in the market that lasts only a couple months. It's a sucker's rally, but you have these little smaller stair steps in here that created wave B. And then you have another bear market that drops you down, stair stepping down to create wave C. Now, there is a tool that you can use that is, like I said, is looking actually for these larger ABC patterns, these larger dips. And it's what we call the reversal lap. Now, the way you can switch over to the reversal lap is right up here. You'll see this little button right here. Now, keep in mind that when you switch over to the reversal lap, you've got to switch back if you want to get back to the normal trend following system. So if you click on that button right there, it'll switch you over. It'll turn blue to tell you that you're in the reversal lap. And things look pretty similar, but if you go under your muscle stocks tab right here, you're going to see some different names for the muscle stocks. You see muscle stock ABC, power play, new ABC patterns. Now, I want to be really clear here that there's too many variables to create an ABC pattern. If you're trying to organize an algorithm that can find ABC patterns, there's too many variables to find an exact algorithm that are going to pull up these stocks that are forming this exact pattern. Okay. So why am I saying that? Well, just because you're in and the reverse lap is sometimes called the ABC pattern app. But just because you're in this app doesn't mean that every stock that pulls up has this pattern, is in this pattern. Okay. The algorithm is trying to find stocks that are pulled back. Basically, what the app or what the algorithm is doing is finding stocks that are pulled back within larger trends. And what you're doing then is, by doing that, then there's a good chance that within those pullbacks you're going to find that kind of ABC pattern look to it. But you'll find there's plenty of stocks where you go up right here, then it just goes straight down. It'll show up in the app, but there's not an ABC pattern in the pullback. In fact, that might just be wave A, and you're about to get a sucker's rally for wave B, and then wave C. It probably might have further to go. So just be aware of that. It's not going to. So you almost need to be able to recognize the pattern first to be able to feel comfortable recognizing the pattern before you should be jumping in and trading the reverse lap, because otherwise you won't know which of these stocks they've just pulled back, but they might be in downtrends and still have a lot further to go. But it does help in many cases to help find ABC patterns. So I'm going to go into this new ABC pattern. Two of my favorites are the new ABC patterns and the power plays. And they're new ABC patterns right here. If we look at this MTD right down here, Mettler Toledo International. Oh, by the way, you can switch the signals on too. And the signals, when the algorithm thinks that pullback is been far enough, it'll start to flash a green buy signal. Now, it's just telling you a range of when it thinks it's moved far enough. It can still drop down a little bit further there. That's why I don't usually buy just on the buy signal, but I wait. I see the buy signal and I wait for it to start to move back up to get a little bit of confirmation to get in. In fact, what you could do is with the buy signal on the trend app is looking for stocks that have gone that are starting to move back up again and go back to buy. So what you could do is you could find an ABC pattern, a deep pullback on the reversal app, and then when it's flashing a buy signal on the reversal app, flip it back over to the trend following, because you want a little bit of confirmation, and wait for it to go to a buy signal on the trend following app. The buy signal would show up somewhere like right in here. It'd show up a little bit later, but it'd give you a little bit more confirmation that you're in the trend at that point, that the trend is now moving again. So that's one way you could do it. Now, the blue bars are sell signals, but you'll notice that if you put your mouse over, if I put my mouse over the blue bar, look in this area right here. I can't do it right now because it's showing a buy signal, but when I put it over a blue one and see how it says sell/TS, the TS stands for trailing stop, meaning you could either sell on that blue sell signal or use a trailing stop. Or you could use whatever trade management system you want to use, which we'll go over some trade management systems in a later class that you could use that work pretty well. Now, this one isn't a real clear A, B, C formation on this one, but what stood out to me, do you think, when I pulled this one up? We're moving sideways. Remember, I said don't get so caught up in that A, B, C formation in the pullback. It could look like this. Whenever you see a stock moving sideways, you want to pay attention to the direction it was trending in before it moved sideways. That's where it's more likely to trend after it's done moving sideways. Well, it was trending up before here, moving sideways right here. I'm starting to get a buy signal. This thing can break out of this range. It's probably going to trend higher. Let's look at this MCK down here, McKesson Corporation. Well, this one has a little more of that ABC look to it. Have this impulsive move up. Looks like wave A. Started to move up right here. There's your suckers rally. Turned around and it's gone back down again. Now, does wave C look about the same length as wave A? Yeah, actually, it looks a little bit shorter than wave A, but it could be a little bit shorter than wave A. It looks about the same length as wave A. Now, if we threw a retracement on here, from a retracement standpoint, it could probably retrace a little bit further. I think that's probably about where the 50% retracement is. It's probably right at the 382 retracement, just eyeballing it. Let's see how close I am. Yeah, pretty close there. So from a retracement standpoint, it could still pull back a little bit further. But it's definitely in an area where it could be done with that correction. So what could I do? I'm getting the blue or the green buy signal right here. I could flip it over to the trend following. MCK, you'd have to enter the ticker symbol there. And I could wait for it to go back to a buy signal as confirmation to get in that this thing is taken off again. You switch back over. And let's look under the power plays. We're running out of time here, but let's go under muscle stocks and look at the power plays. And let's look at JD right here. Now, again, what I'm looking at is here's an impulsive move, here's a step. And there's I would say this is the next trending move. There's a little bit of a pause right in here. So there's a little bit of a step in there. But then it had this move down. That's kind of your wave A, wave B, wave C. You can even look back here. And part of learning this too is look back on charts, because that's where you see ABC patterns that have already formed. And sometimes it's obviously you can't trade those, but at least it can help in recognizing the pattern. I can look back right here and see, there's your impulsive move up. Here's your first move down, wave A, wave B, wave C. And even if you don't want to focus on wave A, wave B, wave C, you can just focus on the fact that it was more choppy, more sideways as it pulled back right through here. About a 50% retracement of that move up, and then it took off again. Here was a move up, and then it moved sideways right here, and then after it was done moving sideways, it continued to move up. And then one last one here, let's look at BLL. down here at the bottom. Again, it looks like you're moving a little bit more choppy, more sideways through here. But here again, you can see here's a nice move up. There's looks like wave A, wave B, wave C. Moved up above. So whenever you see a stock moving sideways, you want to pay attention to the trend it was in before it moved sideways. That's where it's likely to trend after it's done moving sideways. All right. Hopefully this is helpful. Again, don't expect to get it all down at once with any of this stuff, especially if you're brand new. What I would really focus on if you're brand new is go back a couple weeks where I talked about the stair step and the real basics of trend analysis. Start there, get that down, and then add to it. But that's why we record these updates and these trainings so that you can go back and add when you're ready to add to it. Go back and add ABC patterns into the mix. And eventually what will happen over time is that these things will just jump out at you on the charts. And that's what you want to get to. Because I'll tell you, that's what speeds up your analysis time. I can go through, and I go through about minimum about 200 stocks a day, but I can do it in about 15 to 20 minutes because I only have to look at the chart, the whole chart for about 2 seconds or so, and I can tell whether there's a trading opportunity there or not, or whether I want to pass on it. And believe me, I wasn't born with that. It took a lot of time to get that down to where but it speeds up my analysis time. I can look at a lot of charts that way and not take up a lot of time to do it. All right, thanks everyone. Have a great weekend. We'll see you on Tuesday for the next market update. Bye now.